Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday, I believe, April 23rd. This will be our chart lesson for today, and this will wrap it up for the week. No chart lessons on Fridays unless I just get, unless I'm just bored out of my mind. And lately, I haven't been bored out of my mind. These markets are crazy and still crazy, and so I got plenty to do. So I doubt there'll be a chart lesson tomorrow. I quit doing them on Fridays just because I need a break and I'd like to get out of here early on Fridays. And unless the weather's really bad, I'll probably leave early tomorrow. So if the weather's bad and I'm feeling really, really good, I may do something, post something for you. It may not even be a regular chart lesson, but I may post something. But if you don't see anything on Fridays, you know that normally, I don't do chart lessons on Fridays anymore. I used to do them 5 days a week, but it just got to be too much, and I like to get out of here. I mean, one of the reasons I wanted to become a trader was to free up more time and enjoy my time, and I just haven't been doing that. I've been working so hard. I really am a workaholic, unfortunately. There's good points and there's bad points to that, but the bad point is I have a hard time managing my free time, especially with my family and stuff. And one of the promises I made to them, if I ever made it at this, I'd spend more time with them. Of course, my kids are getting older now, so it's just me and my wife. It's not so much time with the kids, but I don't want to waste a whole lot of time on that. But a lot of times people ask me about my personal life and why I do trading and stuff, so I like to throw it out there just for the new guys every now and then. But the main reason I got into trading was because I was tired of corporate America and working 80 hours a week and traveling every week and being on the road and working for some corporation and making them lots of money while I was limited on a salary and a bonus structure basically. So um, my goal was to get away from that and free up, and so I can, if I want to take a week off now, I can take a week off and go wherever I want, whenever I want. And I do that 2 or 3 times a year. When this coronavirus thing is over, I'll probably take a nice vacation somewhere, and you guys won't hear from me for a week or two. I need it, that's for sure, and I know some of y'all probably need it too after being cooped up. But anyway, one other thing, I may get a phone call during this, so I may have to pause it. You probably won't know the difference, but you'll probably hear the phone ring in the background. My daughter called me a few minutes ago and had a blowout on her car, so I sent AAA to take care of her, and she's going to call me back and let me know once they're there and got her squared away. And I didn't want to keep waiting because I don't know how long it's going to be. So I may have to pause and take care of my daughter for a few minutes. But anyway, I will. You probably won't notice other than to hear the phone ring in the background. But anyway, I got a lot of stuff I want to talk about today, so I don't want to waste any time. And I'd really like to get these videos. I'd like to keep them down to about 15 or 20 minutes every day, but it's impossible right now with all the stuff I want to talk to you about and all the trades. I mean, you can see all the trades today, and this was a one crazy day. And if you're a member of our premium section and you go in and look at my mid-morning chart that I post there every morning, and there's the phone. Okay, that was her, and she's all squared away, and so no more interruptions, I hope. I'm actually going to turn the ringer off on this thing just so we don't get interrupted. But again, I think I was talking about my mid-morning chart, and one of the comments I made was I looked at some of the economic indicators. I don't normally look at fundamentals or anything like that because none of it means anything, and that's really the point I'm going to try to make here, is that we've been, if you look back, I mean, since we made that low, we've sold off again, but we've mostly trended up. Definitely the last 2 days we've been trending up. Of course, we took some of it, we took most of that today back, but early this morning we were trending up rather strong, and you can see from yesterday morning we've traded up for 2 days. And again, I was looking at the economic indicators, and if you look at them all the way back, there's several of them I looked at. I didn't pull this stuff. Somebody else was doing it was a news article that I read or something about the economic indicators. And if you look at those numbers all the way back to the original Great Depression, the the numbers are down so far. It's not even, it's unbelievable. I mean, the actual Great Depression just looks like a little blip. I mean, it looks like if this was the chart, this would have been the Great Depression right here, and this is what we're looking at right now. That's how bad it looks as far as how far down these indicators are. And so, and you look at that and you see this market going up every day. It just doesn't go together. So you can't rely on fundamentals. And that is part of, there's two different things I think that cause this today. They'll write the news to fit this, so they'll come up with something. But one of the things I saw was a doctor, there was a headline that said market sells off after doctor says that one of these drugs that they thought they were developing for the coronavirus didn't work, and so they're back to scratch, and that's what they blame this sell-off on. And that very well could have been it, but I know they will write the news to fit this, to fit the price. I used to think the prices reacted to the news, but it's the other way around. The news reacts to the price action. Once you figure that out, you'll know that it's pointless to follow the news, to keep up with fundamentals. None of it matches. And so you're just wasting your time if you're trying to do that. All we want to care about is the chart. The chart will tell you what it's about to do and where it's going and so forth. So learn to recognize that. But anyway, if you, my point was is that this market should be going down big time. Shouldn't be going up at all. So, you know, is the market rigged? Do the feds keep it propped up? My guess is yes. But I'm not a conspiracy theorist that runs around, you know, claiming we got a plunge protection team and all that stuff. Does it happen? I'm sure it does, because I just see no reason that this market should be going up. And I know they finagle everything around. I mean, you see the big banks on Walmart were taking care. They took the small business funds that were set aside for the mom and pops, small businesses, and they gave that money. They loaned it to all their big time corporation friends and made $10 billion on writing the loans and doing so. It's all rigged. Wall Street's just rigged it for themselves, and they're greedy, and I don't know, I'm just losing a lot of faith in people as a whole on stuff like that. Just nobody's honest anymore, and it's sad. But anyway, I didn't mean to get off on that tangent. I'm going to start with my list here. Actually, I want to talk about the sell-off since we're already talking about that. Notice we got the trend working up. A lot of times you can ignore these little breaks in the overnight, but notice I drew it off the first two swings. I started at the bottom and I went off the bodies of the first swing, and that gave you your trend line. Didn't come back. Prices didn't come back to it till here, but notice you got your break when we were trying to make a new high, and then we got that first. Now let me back out now, so we're at a little different angle here. And you got that first swing right there. And if you drew that line, it came back and confirmed it right there. And notice this little trend line working up. You got your close outside and two legs to a new high. So price action predicted that price. Now they didn't tell you it was going to drop like that, but if you're following this price action and you're drawing these trend lines, you could have caught that trade right there. You wouldn't be expecting this to happen. You're just expecting the next leg down. But if you got in right there, that was easy going. And even if you didn't catch that one, you got another chance to get in right here, and I'll explain it a little later. I'm not going to go into the trades really at this point, but notice that trend line, that short term working up, and you finally got a close outside. You moved up one leg, you backed up, you moved up another, and made a double top. And if you'd drawn your trend line off that first swing there, when the next one came back and confirmed that trend line, I wouldn't be afraid to go short there at all, just to ride it back to the EMA if anything else. And look at that. So just following the price action would have got you in that trade. And that shows you that even when something crazy happens, it still fits the price action. Don't ask me how or why it does. You know, it's just, I can't explain it. But notice we came back to that trend line again here. Notice that we moved down, backed up. That turned out to be your midline. Notice it was at the same place these were. And we went on down and made the next equal distant move down. And if you would have just measured, even if you didn't know that, even if you couldn't find that, if you just measured that first leg, that would have got you at least here. We went much further because the equal distance for the way this played out was down here. And so this stuff works. I could show you market geometry all over this thing. Even when we went back up, you got one leg, corrected back to here, and you got another leg. Right back to the trend line. Actually, that measured moves a little further, but it couldn't get any higher because the trend line's there. So it still predicted pretty closely to where prices were going to go. So trust me when I tell you that this market geometry is real. It's real. But I'm going to try to speed up here because we're 11 minutes into this thing, and I don't want to do an hour-long video if I don't have to. Somebody asked me to talk about the but oh yeah, that was the other thing I wanted to say about this right here is this is a good example of why you need stops though, because you might have been long going up here. And if you don't have your safety stop, let's just say you were long right here. Of course, you would have had plenty of room to get it, but that moves really, really quickly. So if you weren't keeping up with your safety stop and moving it up through there, you could have got in trouble in a hurry with that. By the time you got your stop in, prices were way down here, so you would have lost all that profit and then had a huge loss too. So this is a good example of why you always trade with safety stops. And you know, if I'm managing a runner up through here, most likely I'm moving my safety stop up below each of these swings each time, just to make sure that when it finally turns and goes down, I don't give all my profit back. So just keep that in mind. Okay, another post that I made this morning was I put up a copy of my micro ES and my ES. I showed them yesterday, and then I put a little post up today as well, just to make sure other people see it. Some people don't. Not everybody comes to the YouTube. Most everybody does, but some people go to the website that don't make it to YouTube. So I put it on the website. I usually put everything in both places. The daily chart lesson that I'm doing now I only put on YouTube, but a lot of if I do a trade, I'll probably end up making a post on the website too, and vice versa. So, but anyway, somebody asked me about the micro E-mini S&P, which is just a much smaller. It's a newer market, and somebody was surprised. I guess they hadn't heard about it. So there's probably more of you that may not have heard about it. It's a fairly new market, and generally, I haven't taken much interest in it either, because generally new markets take a little while before the volume pick up and people gain interest in them, and most of the time they actually did a mini or a micro E-mini years ago, and it never took off, and they ended up doing away with it. I guess there wasn't enough interest in it to keep it going, but it appears to be some decent interest in it this time. But somebody asked me what the specs were on it and wanted me to talk about it. So if you look at the micro E-mini S&P 500, it is each move is a quarter of a tick, and each tick is worth $1.25. So it's basically the same size tick as the E-mini S&P, but each tick is only worth $1.25 versus $12.50. So I guess it's a 1/10. Would that be 1/10? 10%. It's about 10% of the size of the E-mini, so it makes it a little more affordable. Instead of $400 margin, the margin's $40. So, and instead of each point being worth $50, they're only worth $5. Right? Am I doing the math? Am I doing the math right? I believe that's right. Yeah. Each 1 point would be worth $5. That's correct. So, or yes, because it'd be 4 ticks. So anyway, somebody had asked me to talk about that. So far, the feedback we've gotten is that it's okay to trade it. There's a few comments in the video. I hadn't read them all, but the few I read, most people said they hadn't had any problems with slippage or anything. So I think you're good to go on that market if you want to trade it and or practice on it. I'd still say the same thing I say always. I wouldn't even try to trade that live until you can double a sim account, because you'll just be donating in that small account. Don't be a donator. Be a collector, not a donator. And so keep that in mind. Wait till you've doubled or a $5,000 or $10,000 sim account trading properly first. And if you can do that, then you're ready to go live. But the good thing now is you could go live with the MES and wait till you're successful there and then jump up to the ES and trade it. That would be my recommended progression. Prove it on sim, jump to the MES, prove it there on where you're only losing $5 a point versus $50 a point, and then once you can do it there, jump up to the ES. And the ES once you get there, I guess you could always go to the S&P, but I don't see any need for it. So I think actually the mini S&P has more volume and stuff than the S&P does. So okay, next thing on my list here is I wanted to just talk about working and trading from a phone. I know a lot of people read from their phone and use their phone. If you're trying to trade from your phone, don't do it. I mean, I know that Thinkorswim has a program where you can trade. I don't know if you could actually day trade from their phone. I guess you could from their phone app or whatever, but don't even try it. And if you're studying your charts, it's okay to read your articles and glance at a chart or whatever, but even when you're studying, you need to be studying from a computer screen. You need a minimum of a 24-inch screen or so. You just can't see everything looking on a phone screen. It's impossible. And another thing I will say too is if you try to use a phone screen on our website, if you're using the phone, if you use the desktop on the phone, you probably can still see everything okay. But if you try to use a phone, you're just not going to get the full benefit of our website. Eventually, I may try to spend some time and see if we can upgrade our site to where it's a little better from a phone, but I just never have thought it was that important, because if you're trading, you need to have a computer and a screen anyway, so most of your studies and stuff need to be done from there. So I never really saw the value in it, but it's amazing how many people contact me and say they're using their phone to do all this stuff. So I just wanted to say, if you're trying to trade or trying to study from your phone screen, I wouldn't do it. You're not going to you just can't do this from a phone. I mean, you might can read some articles and glance at a chart, just see what it did. I don't see any problem with that. But if you're trying to study and trade and do all this from a phone screen, you're at a huge disadvantage, because trust me, the guys that are professionals that do this, they've got professional equipment, professional screens, computers, software, and you're not going to beat them from a phone, and you're not going to be able to get the full value of your studies from a phone. So if you're trying to do this from a phone, if that's all you got, by all means, I don't want to hold you back. Do what you can, but you're not going to find success long term, and you're going to be at a huge disadvantage. So just keep that in mind. Okay, next, I want to talk about this again. I got a question about this, and there was a little bit of mix up about what we were talking about. And somebody wrote me back and asked me about what was written on here, and I misunderstood them at first. They were really asking me about these 3 arrows here, and I didn't draw the circle or this right here. This was the question that came from the other trader, and there's also a hidden second entry in here. I'm going to bring up the other chart because it's a little clearer to see without his notations on it. But I want to show you something here, and I hate to bring this up, but several people have asked me, so I stuck my foot in my mouth by bringing this up to begin with, but I wanted to make it clear what was going on. There's there's a hidden second entry here, and then there's a second entry I showed you. And notice this green bar goes up, prices move up, they make a new high here, then they trade down. So there's one leg up, then there's a correction, and then there's another leg up that comes up to here, and then prices turn down. So there is a hidden second entry when prices break just below that bar right there. Now, this is much more advanced, so if it doesn't ring to you, just don't even worry about it. Don't worry about it, because it's not that important at this point. If you're new to this, you don't want to be looking for these anyway. But once you get better at this, this is a little more advanced. But there's clearly two swings back to the EMA. It just didn't break lower here. But if you went to a smaller chart, I'm sure this is a 2,000 tick chart, but if you went to a 1,000 tick chart, I guarantee you'd see a move up, a first entry, another move up, and a second entry short here. And that's what I mean by hidden. It's happening at a lower level, but you can see everything in this chart. And if you look, you can see second entries on a bigger level. This is probably a two-legged back on a bigger level, or maybe right here, there's still a second entry even right there. Notice it moves up. First entry, and then it moves up second entry. So there's another one right there. It's not even marked. But anyway, I hope that's clear. There's a hidden second entry, and that's why price action, that's the beauty of price action. There's something going on at every level. The lower levels, you can see the same second entries, the trends, the ranges. If you go up to a daily chart, you can see the same stuff. If you go up to a weekly chart, so it doesn't matter what level, it works on every chart regardless. And all a hidden second entry is it means at a lower level there's a second entry there. And eventually you can see it on this chart, but you can see that we move up, we turn down, we move up, and then we turn down again. So, and that's what those arrows were showing. But I was trying to show the true second entry here, but notice you're working up and you get a first entry here, and then prices make that first entry short, but then the next bar doesn't go lower. That's a correction. So when prices break below that, that's a second entry short on this level chart. So there's two second entries. There's a hidden one that when it breaks here, and there's a real one at this level when it breaks right below here. So I hope that's clear. If this doesn't make sense about the hidden one, please don't send me an email on it. Just forget it for now and continue to work on the second entries, and eventually that'll just be crystal clear to you. But usually when I show something like that, I'll get 75 emails of people wanting me to, I didn't get that, can you explain it to me? Well, I can't explain it any clearer than that. So watch this over and over and over and over until it makes sense. And if it doesn't, just forget about it for now. So I hope it's clear to everybody, but I'm sure there's some newbies that don't even know what a second entry is yet, and so they're really going to be confused on that. But please don't send me an email about it, because I'm not going to answer. And that leads me into something else I want to show, which is talking about when you count these matching lows. Because see, there's matching highs here too, but we're still working down here. You got two matching highs, so that's not really a correction. The correction is that we're already moving, so we're really not making a new correction. It's the same correction all the way down. But going this way, this was a correction here. And then it stops. So that is a second entry. That's another entry coming in this direction. So I've got another chart I'm going to pull up, and I think it'll be clear. Okay, we're really going sideways here, but I've moved this over to the far right. Notice you got a matching low right there. We're moving down, and I hid what's on to the right of it. But look what happens. Prices will actually break higher here and then turn down. So if you're counting from up here, that's a first entry, right? Because it broke higher. But if you're counting from down here, that's a first entry, that's a second entry, and then that swing is lower. And there was a swing there. before prices broke higher. So your count's 0. And when it turns back down, that's a first entry. And then you make another new low and it starts over. I'm still not sure if that explains it, but you can have matching lows that don't mean anything. I thought there was another one. I'm gonna pause it here. Okay, I remember the reason I had this because this trader asked me if that was a first entry because it made a 2-bar matching high right there. But it's not, because it made the 2-bar matching high. This is just an inside bar, really. It was a first entry when it broke higher right there. So I don't know if that's really hard to explain. I don't know much other way to do it. You're interested in it in one direction, and you're not. I thought there was another. Let me look at this chart one more time. Okay, here it is. Prices are working up, and you get a first entry here. And then you get this little matching low. Well, you could treat that as a second entry because you corrected right there. You stopped going lower and then you went lower again. But notice you got a little matching high up here, but you're already working lower. So you didn't really go correct in that direction. The correction is working the other way. So I hope that's clear, but notice it's a first entry and then you get a little second entry. You wouldn't want to take that short right there because that's just it's an up down bar. That one's neutral. It's not a good setup, but there is a second entry short there. It fails and goes higher. And there's actually just a first entry on this side. So because this thing never really quits correcting down this way. It does stop correcting to the downside. It doesn't stop correcting to the upside. So you're still making lower, lower, lower. Here you're making, you start down, you make a lower, and then you don't make another lower. So that's why it counts as a new low right there, because you had a correction. Here you didn't have a correction. You're just going down. You still made a lower high. It's equal, but it's still considered lower, lower. So you're still on your way down there. But on this side, you made a lower, and you could have made it another lower another one right beside it, and it'd still be the same thing once it broke lower. If it never broke lower, it's still, that's just where your correction ends. But because it didn't go lower than that bar, it stopped correcting down this direction. So I don't know if that's clear. It's really complicated. It's really not that complicated, but trying to describe it is something else. So I hope that's clear. We spent a lot of time on it, but I wouldn't worry too much about those until you really, once you start to get all this and you've been doing this a while, it'll make sense. I'm going to describe it one more time. Notice here we made this is a good example because there's matching highs on both sides. But you're correcting, you're still correcting because you never made a higher high than that one right there. So you're going down, you're still considered going down, you're still considered going down. Here you're going down, but you don't go any lower here. So that's considered a correction. So if the next one breaks lower, you can count that as a correction. So there's your new low, your first entry, and then you got a correction. So if it breaks lower again, that's a second entry short. But coming back, it's just a first entry long. Even though it looks exactly the same, it doesn't work the same. So I hope that's clear. Okay, another question I got was, you'll hear me say a lot, you got to have room to scalp out. And somebody asked me, what do I mean by that? What does I got to have room to get out or scalp out mean? Well, let's say that you're at the far right of this chart and you're wanting to go long here. Well, notice how many times prices have tried to go higher right there and touch that line and couldn't get through. So there's not really actually there is a second entry right there. Notice that new high and you pull back first entry, then you pull back and you get a second entry long right there. And that's a fairly bullish bar. Let me see if I can make this bigger because I know some of you are watching on your phone. But you got a second entry long right there. But notice how many times, 1, 2, 3, 4, 5, 5 times in a row you couldn't get through there. So between here and that line where most of that resistance at, you don't have room to scalp out. Now, if this bar was, let's say, right there, and we wanted to go long, you might have room there. You're still questionable, but you might have room to scalp out there. So that's what I'm talking about when I say you got to have room. So if you come back to this trade right here, let's say you want to go long right there, notice you got plenty of room back to that high. So you got room to scalp out there, where when you come over here, if you tried to take that second entry long right there, you don't have room. And guess what happened? It goes right up there and turns down. And you would have got stopped out right there. So that's what I'm talking about you got to have room to scalp out. Now this one pushed on through, but look what happened. It failed instantly. And that's what you expect to happen. This is a trading range. So what happens when prices break out of a trading range? They fail. Then it failed out the bottom. If you draw the line, I'm going to just show you real quick. We'll walk through this. But notice it failed out the top, failed out the bottom. It got back in there, failed out the bottom, failed out the top. It kind of got back in there and then went lower. And even then it came back and tested. It tried to fail even that time. That's what happens. It'll come back and test it. It'll either hold its resistance now, or prices will push back in there and probably start going, or they'll go on back and go through the other side. So I hope that's clear. I wanted to show this gentleman's trade here, and we were definitely in an uptrend. And notice it made a new high, and you come back and you got a first entry, and you come down here and you got a second entry. And he took that trade. And of course, it worked because look how far that bar went. But what I was telling him was this probably was not a good trade, because look how we shot below the EMA and your second entry's under there. And your key entry point is way down here. So you actually had an overshoot on your channel here. So even though prices turned and went higher again, prices probably, you're expecting them to come down here. So you would want to probably wait on a higher low or something. And notice how this keeps working lower. And you keep making lower lows until finally you made a higher low. And then finally you made a second entry long right here. And you're back above the EMA. And notice how that's when it took off, because the smarter traders realized that now the correction's over, because we're coming down, we got our break, our new low, so that ends that trend. We could get another leg down, or we could get another trend that works at a different angle, but if you get this higher low on a second entry, take it, because everything's played out here. Plus notice we bounced 3 times there even after, but we still had the break and a new low in place. A lot of times you'll get 2 legs to a new low, but in this case, and notice what happens, not only did we get this higher low that was showing proof that the market was probably going higher now, but notice what happened when we went back through the EMA. We went back through it, tested it once, tested it twice, and we really tested it a third time. And really what you had here is you got a little congestion, another little trading range, and this was a little failed break out of it. So that was worth a scalp no matter what, probably. But look what it turns into. Those little important lows or important highs if you fell out the upside, I always talk about. And look how prices shot way up there. So I hope that is helpful too. So draw your little short-term trend lines. He had his on here, very good. They should have been a little tighter. They should have come right across here. He still got the break here. I mean, this is close enough, but really your lines ought to be much tighter. It's not that wide. And you probably would have had a little overshoot here, and you would have had a much bigger pronounced break of this channel. So he's got the lines right. They're just not fitting what I call neatly, because you see how you're not getting back quite to the line here and turning down. And I can't see here, but we did hit it here, but I think we really overshot it. Notice here it didn't hit the line. I don't think it quite hit right there. Maybe it did. But these lines need to be pulled in much tighter. I think he's got the perfect angle on them. He used this pitchfork, which if you know who Andrew is. I forget his first name. Andrews was his last name, but he's called Andrews Pitchforks. But that's where I learned. I did some extensive study on that 20 years ago. That's where I learned about midlines and measured a lot of what I got from my measured moves and stuff. I can't use the pitchforks. They don't work for me. But you see, they did work here. They don't hold the prices as neatly, and I want to see those prices held neatly because you get a little better read on it and so forth. So, and here's an email I wanted to read. This trader sent it to me. He makes a good point that I wanted to share. He had a good day today. I think this was today's, yeah. He said, I just wanted to show you a picture of my chart. So far today, I've taken 4 trades, all winners so far, though I need to go back and grade my trades at the end of the day, which is something I've been doing daily lately. I grade each trade. He just goes on to talk about how he grades his trades. But the point I wanted to make was he made 50 points today, where on the previous day, he said on 421, I just wasn't in the zone and nothing seemed to be clear. So that one bad day erased a lot of good ones. Should have walked away. I definitely have still got some work to do, but your recaps make the job and so on. But really the point I was trying to make that he's getting here is if you're having a bad day, at the very least, get up and take a 15 or 20-minute break. Go walk around the block, go walk your dog, go say hey to your kids, go hug your wife, your girlfriend, your boyfriend, your husband, whatever. And take about a 15 or 20-minute to a 30-minute break and then come back and reevaluate your chart. And you'd be shocked sometimes how much different it looks and how much clearer. But if you start having a bad day, you'll just take a bad day and turn it into a worse day. And so at least take that break. And if you come back after the break and you still have another loser or something, then just wrap it up and call it a day. Because sometimes your mental frame is just not right, or sometimes you're just not reading the market, or maybe you were in a bad mood or weren't feeling good and you brought that to your trading with you, because your trading will tell you a lot about you. If you had an argument with your spouse or significant other or whatever, and you come in and trade mad, that's probably going to show up in your trading, and you're probably going to be mad at the market and try to take it out, and the market's going to take it out on you instead. So don't trade when your mental frame is not very good. That's the point of that email. Here's another email from a guy who's been trading for 2 years before now, and he basically trades the YM, and he says his results were pretty bad up for the previous 2 years, but I'm just going to read you part of his email. It's pretty long, but I'm just going to read you the important part that just shows that he's having some success with this stuff. So I bought your manual about a month ago, and after reading it a couple of times and did some testing with ATM strategies in Ninja, I started sim trading seriously on March 30th and have done so till today. I've traded price action for 2 years with a naked tick chart on the YM, but the results were pretty bad. What you tell and show makes a lot more sense, and although I guess he's saying although I'm still on the simulator, my results are very good now. My percentage profitable is 77%, and after 99 trades, Ninja stats say 198, but I'm using the stop and run strategy, so that's 2 contracts per trade, but I'm up $3,425. These numbers are just amazing. I can only imagine how it will look over a couple of months. Exactly, especially as you get better, because you're going to get better at this. You're just getting the grasp of it right now, and the longer you do it, I still get better. I only look for second entries in line with the trend, and I begin to spot the failed second entries too, and I believe that the best way to take advantage of these is when failed second entries happen, which in a counter trend. Yep, those traps work out great. I traded, that's pretty much the gist of it, but he's tried trading price action in the past for 2 years with, he doesn't say how bad it is, but from the way he described it, results were pretty bad is the way he described it. So, and now it's working for him. So this stuff works. And that's why I read these emails, not to pat myself on the back, but to tell you that other people are using it. Yeah, he's still on the simulator, but he couldn't even do it. He probably couldn't do it on the simulator before. That's the point I try to tell people. People come up with some excuse. Well, anybody can do it on the simulator. I bet you they can't. You'd be shocked how many people come to me and they've been trying to trade on the simulator for years and hadn't made a dime on even there. They might make a few trades here and there, but they always give it back. And that's the problem. Okay, we're at 40 minutes. I'm gonna try to get through with these trades in 5. So and there's a bunch of them, so I'm going through them real quick. I'm just gonna describe what is there, and I'm not gonna spend any time on it. So I just don't have time. But notice we're really going sideways here, but you can see the trend line working up, and you just came down here. You made a first entry, and then you made a second entry long right at the trend line. That's a bullish candle. Yeah, it's got some red in it, but that doesn't mean it's not a bullish candle. Look at all that stem down there. This candle closed almost on its high. That's a good second entry. Then we ran up here, and this was the one I think I showed on one of the other charts. But notice how we're just going sideways. There's actually a second entry long right there. Notice that new high. You're working down first entry, second entry. But look what's going on by the time that happens. We're just going sideways. Don't forget it. Now we're in range rules. That's a little congestion area, which just means a tiny range. Forget range rules. And then we get a little failed breakout the low that hits on the EMA and bounces. You probably want to have room to get out there. But I'd probably take that anyway because the trend's up and it's a failure to the downside. Just go long right there, especially with that nice bullish bar. And boom, off it goes. Notice how it rockets off. Because the smart traders know what's going on right there. They know it's a failed break lower, and it's probably going to, everybody probably jumped in short. Some of y'all watching, I guarantee you got short right there into the EMA on a break out of that range. And you just got trapped, and all the smart traders, you donated to all the traders that know what they're doing. And that's why that rocketed up right there. Because all those uneducated people that don't know what they're doing went short right there. And they all had to exit. And once it starts climbing, everybody else sees and wants to jump in. Most of it is due to all the sales hitting all the stops that were probably put right here or right here. From the guys that went short here. Their buy stops are all up here and up here. And then boom, you're hitting them. It rockets up and then it just kind of goes back to normal. Notice you're coming off the top right here. I think this was the trade the guy went long right there that I didn't like. I actually marked that as a short. Notice we just came off the top, the high. So where are we going? We're probably going back here. And this is a reversal pattern. Notice you're coming down first entry, pull back. There's a second entry long that fails. Guarantee you trap some longs that are just that a lot of you guys that just all you know is second entries now, and so you look for them all over the chart and jump in. Well, the trend switched here. Notice this working up, and you got to close outside new high. That tells you that little spike in channel is over too, and you just came off the high side, so you're at least going back to the EMA, probably going back to here, and you most likely even going all the way back to here because that's what prices do. They go back and forth. So that's a great trap. I marked it green. It's aggressive, but if you know what you're doing, you've been doing this, I'd take that trade every time probably, because you're at least coming back to here most likely, and hopefully down to here, and you get a runner. But notice what happens down here. It bounces. You really could almost go long right here. If that would have made an equal or a higher low, let me make it bigger. I forget you phone guys are probably watching. Notice we went lower right there, so I don't really, even though there's a double test of that, with that making a little lower low, you could take that. I could mark it green. I wouldn't be afraid if I was wanting to be aggressive, but at this point you've already had some good trades. You only want to be aggressive if you really need to be. But so just say, hey, we made the low right here instead, and you get one test, two tests, you made a double bottom there. That's a great place to go. And notice how we ran up and pushed through the EMA and then pulled back. That's showing you, notice how that high is way higher than that one, and even some of these bars. That's showing some new strength. So we're probably going to reverse here pretty quickly. We could run on down here, but when it bounces right there, 1, 2, 3, 4, 5, 6 times in a row and gives you that bullish bar, just go long. There's a higher low here, but there's not room to get out between all that resistance across there. And look what happens. If you got caught going long there, you might have scalped out, but you probably got caught in that. It came back, stopped you out, and then went right exactly where you thought it was. Don't enter in this stuff. And don't enter without enough room to get out. And here's that repeat pattern. Same thing. This is a repeat pattern. It's the same thing as that right there. Once you see a repeat pattern, just take it and look what happens again. They trapped all, they trapped all the shorts, same exact thing. And I guarantee you the same guys that did that went short right here, went short right here one more time. They're setting it up perfect for their perfect donators. And look at it go. And they trapped them all and it rockets up again. And guess what happens one more time? This one is not the same as this one, but because you didn't get that trap. But still, I guarantee you a lot of them, even without a good trade, were trying to get short again up here because there's some resistance. And they didn't wait to confirm a short. They just guessed. And they got trapped. And it's another repeat pattern. It's the same thing. Tested it once, twice. You made that low and you got a double test and a bullish bar. You don't have a lot of room here, but with that going low like that, that double test and an uptrend, especially with the trend line right there, you're probably okay to take that trade. You could go back and forth if that one's aggressive because there's really not enough room to get out. So you're taking a little bit of a chance, but if you understand prices, you know that they've probably trapped some shorts, and you know with that many tests, a double test, we're probably going higher. Remember, the market tries to do things twice. So it made that low and it tested it once, twice, and when it didn't go, it goes the other direction. And look at it go, boom. I mean, look at it. Then you overshoot. So we're probably coming back to here, but where else might we go? We might go here, but notice we overshot it. So we may come up a little short, but at least we're probably going to go a little past it. A lot of times it'll be an equal distance. And notice we actually went a little further than that probably is, and then it corrects. Just what you would expect, perfect price action. Here's one of these on the other side. I didn't mark this short because it's right into the EMA, but notice we're stuck in one of those little ranges and it fails out the top, and we're really going down. You're probably going to at least get a measured leg like that right there, and look at that, right back to the midline. But that's probably not a bad trade. I didn't mark it because it's counter trend. It's, you know, for a bunch of new guys watching, it just give you something crazy to look at and you'd make a bad trade. But now you confirm the trend line here. It didn't hold very long. So, but notice 1, 2, 3, 4. So you kind of got a good downtrend going. There's not a setup there. But when you made this second leg, so notice there's 2 legs up. That's a second entry short. Look at that bearish bar. Just go short right there. And you'll probably get a measured move. And you actually went much further down than that. And so now you know we're probably going to reverse. We got the break. We overshot, so we're probably going to get the break. And sure enough, we got the break, and there's a reversal pattern. First entry, then it kind of pushes up. It's not a good strong push, but it still closes above the EMA, and a failed second entry short right there. Go long right there. And that one didn't fool a whole lot of people. We already talked about this one. Just draw that trend line. First you would have drawn it here, but when it went up higher, you'd have moved it up here. And when you came back and confirmed it, you had plenty of time to put your order in there. And then all of a sudden, boom, it was gone. I mean, just in a blink, we were down here. Let's just see how long. This is when the trade triggered on this bar, which the time, come on. Sometimes this thing's a little, there we go. The time was 11:44. And we were all the way down here. At 11:40, so 3 minutes to run from, that's 27.87 from 28.25. So that's a good, what, 30-40 points down in 3 or 4 minutes. And you could have got it if you know this is a trap here in that trend line. It's a lower high, it's a double top. Even if you were just trying to get a little scalp out of it. But even if you don't catch that, Then you come down here, you try to go higher once, you try to go higher twice. That's a failed second entry long. This is actually the signal bar, so your stop has to go up here, but you would have gone short one tick under that bar because that's where the failure occurred when it broke lower right there. So I put the thing over that bar, but always remember your stop has to go above the swing high, so it'd have to go up here. Didn't matter because it just took off. But just in case, you know, it did back up some, so if you'd left it somewhere in here, you might have got stopped out. And people send me their trades all the time, and they get stopped out on perfect trades because they don't put their stop above or below the signal bar where it goes. They try to put it in the middle, worrying more about the 8 ticks. If you don't know how we're handling the 8 tick rule and still getting our stop in the right place, go to the price action website, priceactiontrading-system.com, and read the frequently asked questions page. There's so many answers there. And now I just steer people there to read them. And I know half the time people don't go read them because they'll still, after they read it, supposedly read it, they'll ask me the same question I just answered there. So I don't think people always go read it either. Please go read it because there's so much free good information on that frequently asked questions page. It's ridiculous that you don't read. You're just shooting yourself in the foot by not reading it because it's all free and it's great information. 50 minutes here. I'm wrapping this up. This was just a lower high. It broke higher, trapped people, turned down, and confirmed that trend line. And I believe it's a second entry. You're moving up first entry, and then because it made those 3 matching lows, it's still considered a second entry short because you're correcting, and then it doesn't correct. Doesn't correct again. So that's a correction back the other way. This one actually broke high, so you know that's a correction. It just didn't make a higher low. It still didn't go lower though, so it corrected, and that's a second entry short, and boom, off it goes. So that's a second entry short. There's a long trap. It confirms the trend line. It's right off the key entry point, and we're correcting. Notice you got that low. You push through the look how easy we pushed through the EMA. First entry short, then second entry short. It failed, and then there's a new high. First entry, second entry. That's a second entry long, a failed second entry short. And we just came off the low, so we're probably coming back up here. Where does it go? Right back up there. We're working up. Notice you make a new high, first entry, and then it breaks lower, turns and goes up. So it makes a correction and a second entry all in one bar. That one's not easy to see, but that's a second entry long when it broke back above that bar. And you're expecting it to go up here to the trend line, and you're expecting it to retest the high of that little spiking channel right there, and it goes right up there. I circled this one because there is a second entry short there, and it is off that trend line, but there's not a very good signal bar, and you get 1, 2, 3 stacked up. That's stacking up probably because it can't go higher, and there was a lot of momentum on this move up, and a lot of people are thinking it's probably done to the downside, but that trend line's there, and if you don't know it, so you might take that trade. I didn't mark it because there's not a good signal bar. Those two are too bullish, and that one's really too bullish. So, you know, if you want to be aggressive, maybe you enter there because look at that move. And you just never really got any setups here. Technically, that's a second entry short. I don't think it made a new low. So you're moving up first entry. And so there was a second entry right there, and that's just 2 legs down really. But you made a new low here, first entry, second entry, but again, too neutral of a bar, but it makes another new low. So first entry, then it comes back up, breaks higher, and when it broke lower right there, second entry, and look how bearish that bar is. Boom, quick, easy trade. And then I actually marked this one because look how many times we bounced right across that line. That's the close from yesterday, and a lot of times you'll see that. That'll be an important price point that it'll test a bunch of times. So there's a double test rule. You're way away from the EMA. It's a nice bullish reversal type bar. It opened, traded down, then turned up and closed almost on its side. That's aggressive, but you do have a break too. And a lot of times those little failed breaks below important support and resistance, and look how big a move that was. And all these people that were short, when it starts rallying, they all have to exit, so you get a little bump. And then you got one more right here. I drew the trend line off this side, drug it over, and so this, we bounced there. That's a second entry. I didn't quite like that one. It's not a, you could not really argue for that to be green. Notice that I first entry, second entry. I didn't mark it, but it tried to go higher again and then made a new swing high because it's higher than that one. And then the first entry and then second entry. And so now you've got a failed second entry short, a second entry long, right at the key entry point, and look how it took off too. So still got room back to this trend line to scalp out. It is a little close back to these highs, but your trend's up here, and this is not like the high of the day. These highs are not as important as the highs or the lows of the day, because you'll get places like this that prices will break above, and places like this that they break back above. But when you get to the high of the day, when you see those highs like the ones I showed you earlier, that was on yesterday, but they were all stacking across, but they were the very high of the day or the very low of the day. You got to be very careful of those. So anyway, a whole hour's worth here. I can't believe it. I'm closing this thing down. I'm wrapping it up. I'm probably done for the week. I hope y'all learned something today. I didn't feel like I really got to everything I wanted to get to, and then I rushed through everything too. So I just can't believe it. These things get longer and longer. Y'all are going to laugh at me for trying to keep it below 30 minutes, because now I did 2 in one day. But I'm going to shut up and wrap it up. Hope y'all had a great week. Hope you have a good day tomorrow. Hope you have a great weekend. Hope everybody's being safe out there and your families are safe from this crazy virus. We'll be back again to do it Monday unless I get some wild idea tomorrow. But I'm done for today and probably done for this week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.